Oh boy, here we go again. Back to work. Hope you guys had a fantastic day. Boy, what a wild trading session today. Big move up, big move down. Now, whenever we see wild moves like this, back and forth we saw today, it actually sets us up for some really easy trades the following day. I have two types of trades I always look for after a big wild session today. I'm going to cover both of those trades and some variations in this video. By the time we're done tonight, you'll have an easy roadmap to make some money on PCE end of the week, Friday morning as well. Now, we have a lot to cover here tonight. Charts are all ready to go, so no time to waste. Enough of the intro. Let's go make some money and finish up the week on Friday morning. Charts are all ready to go. As you can see, Nasdaq triple Qs are all ready. The E-mini and the SPY is ready. I have two very important clues on these charts right now that are tipping us off to where I think the winning trades are waiting for tomorrow. One of the most obvious clues here, very important, is we're bullish overall on the S&P and SPY, bullish overall on the Nasdaq and the triple Qs. I like to use these higher time frames, these hourly time frames, to give us the best overall directional filter for tomorrow morning's trading session. But you know what these don't do? They don't help us time the entries. I have one even more important clue on some faster time frames, some tick charts that will help us tie this all together and time some winning profitable entries to finish up the week tomorrow morning. Now, before we jump in and talk about those entry clues for tomorrow, let's check schedule for tomorrow, because tomorrow's a pretty busy Friday trading session. Three things on my radar for tomorrow. First things first, the biggest news of the week is the personal income number tomorrow morning at 8:30 Eastern time. Expect some volatility. Be prepared for that early in the session tomorrow morning. Second thing on my radar tomorrow. Tomorrow is one of the last couple days of the month of September and the last couple days of the third quarter. End of the week, end of the month, end of the quarter. Expect there to be some scarcity in the market tomorrow. And of course, that will uptick volatility. We saw a taste of that volatility increase a little bit today, didn't we? The final thing, third thing on my radar tomorrow is tomorrow's a Friday. Fridays, they love to run in the afternoon. My goal on Fridays is to get in early, take some profit quickly, but leave a runner. Go back and see for yourself. About every other Friday, half the Fridays, they close right at their high of day or their low of day. So again, tomorrow, Friday, leave that runner into the close. Personal income, 8:30 Eastern time. Uptick in volatility, end of the week, end of the quarter, end of the month, and Friday mindset in early. Let that sucker run. Now, back to our charts. I mentioned earlier, there are two important clues tipping us off to the right trades for tomorrow. One clue is the easy one, right? You know we're overall bullish. You don't need me to tell you that. But again, these hourly charts are not going to help us time the entries for tomorrow. Let's drill down now to some tick charts. Tick charts are based on volume. They make pattern recognition a hell of a lot easier. This, of course, is a 7,000 tick chart, all the time frames you need in the upper left-hand corner. And if you're watching for the first time right now, welcome to the channel. That is the 21 EMA right there, pretty much the only indicator we need to find lots of winning trades each week. I mentioned earlier, there's one obvious clue. Anytime we see these wild markets, big move up, big move down, bouncing back up, what that tells me is the markets are having a hard time holding one direction. Anytime we see big moves in both directions, it usually means there's a range coming tomorrow. And that makes perfect sense because we get the big PCE number, the biggest news of the week. Now, ranges. What you need to understand about ranges is that ranges, two things. Ranges are magnets and they like to rotate back and forth. Now, we are an overall bull market, as we saw on the hourly chart. Knowing that, I have two types of trades I love to get for tomorrow. My favorite trade is a bear trap underneath that low. Now, bear traps. When I talk about bear traps, what I mean by this is I'd love to make that run lower. I would love to trap in some sellers because this is a horrible spot to be selling, right? And I'm not going to blindly buy down there. What I'll do is I'll trap the sellers in and we'll use what I call a failure pattern. Very simple. Let the bears try once. Let them try twice. Once those bears try twice now you're trapped. Now I can use your stops to fuel that reversal going higher. And remember, because ranges love to rotate, the amount below the range, the amount above the range, that will give us some easy targets on the other side of that range. This is called a failure pattern, just like I teach in our free video classes. On the rotation higher, this is where we can add to our winners. If you want to make more money, don't trade more often, add to your winning trades already. Easy way to do that. Watch closely. Watch a shallow pullback, a higher high in price. The shallow pullback will separate off the moving average. Separation equals strength. Pop up, shallow pullback, higher high in price. That sets up what we call a technical bear trap pattern. That's the way I add to the position as we go higher or jump back in if you miss the failure pattern off that low. So 2 trades I look for after a big wild session like we saw today. One of them is this basically a bear trap pattern. It's a failure pattern, 2-try failure into a technical trap. And again, very important, I want that shallow pullback to separate off that moving average. And again, move below, the move above, that will give us some targets up overhead. That's one of 2 trades I'm watching for tomorrow. The second trade is going to be a breakout pullback. Now, breakout pullback, remember, if this is a range tomorrow, if we're rotating back and forth, we're bullish overall, there's more likely now that we wind up popping and keep going, right? Because we're overall bullish. Now, these can be tricky, so make sure you watch closely. One trade to look for on the move higher is that separation off the moving average and a technical bear trap. This will make a lot more sense once you guys are in our free video classes, right? It's a higher high in price. And again, that shallow pullback barely touches, if not doesn't touch, that 21 EMA. That is your trap pattern entry. Now watch closely. The size of that move higher can be used as a measuring leg. Pin it off that low. That will tell you where to take profit on that bear trap entry below that low. Now, once we get that measured move, now think about this trading range acting as a magnet, right? Ranges act like magnets. This is where what I call a 2-legged pullback comes in handy. What's a 2-legged pullback? It's just like it sounds. It's one leg below it, it's second leg. Now, in the free video course, I talk about measured moves. Think about a measured move or an ABCD that goes a little bit too far. Ideally, this will overshoot that measured move by 10, 20%, right? Think 115, 120, 130% over that measured move. Now, once we get that run going lower, remember, we're all bullish off of that low and we're all bullish on the 60-minute. This is a horrible spot to be selling. If you want to sell that top. Very difficult to pick tops though in an overall bull range like this. So what I'll do is when the market pulls back, remember that failure down here I mentioned earlier? Same pattern, rinse and repeat. Trap those bears in, 1 try, 2 try. Why 2 tries? Because again, I want those stops, right? I want to run those stops. We don't pick bottoms. And we don't use indicators like MACDs, RSIs, even order flow. It's just inconsistent. It's not reliable enough. I would rather wait for the bears to get trapped in and again, use those stops, squeeze those stops. When those bears are trapped and they get out, they're buying their way out. That's why they work so well. And remember, want to make more money? Add to the position. If this thing starts to rip off that failure, watch that shallow pullback, that higher high in price, that failure into bear trap combination. Now, one cool thing about ranges is that when they break out, you can use that big move as a measuring leg. Measure the size of that leg, pin off that low. That will tell you. Remember, Fridays, they love to run. So leave a piece of that sucker open and let that sucker run. Again, it'll be a bear trap going higher. Make sure we get that separation on this one. It has to be strength going higher. Bear trap going in, and then again, 2-legged pullback, a bit more than a measured move. Don't pick that bottom. It may roll over here, and I will talk about this in a moment here. Don't pick that bottom. It's that failure in a trap combination. So 2 basic trades I'm watching for tomorrow. It's that failure in a trap combination below. I love that trade for tomorrow, obviously, or that breakout pullback up above. Now, believe it or not, I have a couple variations. I have one variation of that breakout pullback. I'll talk about that in a moment. and I've got like 3 variations, different ways to time the entries below that low. But before we talk about the variations and kick this up a couple notches, let's slow down for a second, because at this point, I know that most of you guys watching right now, you know these patterns. You're making money on failures and traps. You know we love ranges so much in our trade room. But if you're watching for the first time right now, this might be a brand new strategy, a brand new language to learn. But don't you worry, I teach the entire roadmap. I teach all the setups. I have hundreds of examples of all the entry patterns I'm talking about here right now, and I teach them all in so much more detail in our free video classes. I'll put a link up top here for you, upper right-hand corner. Grab that link that popped up there and take that free trading course, because the strategy I teach will teach you a simple trick we use in our members trade room that tells us where the winning trades are waiting for us each day. More importantly, I'll teach you 4 my favorite entry patterns, help you time better entries, and start making more money. Guys, the markets are way too good right now not to be making consistent money. If you're tired of missing the best entries, if you've lost your confidence in your current trading strategy, again, hit that link that popped up, take that free video course. Everybody loves the free video classes. Learn the roadmap, start making money on your own. Perfect for anyone who is serious about making money in these markets. Also, be aware too, if you can't get the link up top there, I'm gonna put all the important links we mentioned tonight in the description of the YouTube video. Start first on the free video course, learn the roadmap, and then don't forget, we trade together every day in our trade room, 8 o'clock Eastern time. I'll put trade room links in the description there below. And if you're on Twitter X, I post a lot of updates, charts and videos and mindset stuff on Twitter X, as they call it these days. If you're on Twitter X, give me a follow. Again, all the details you'll need to follow along, learn more, earn more, are linked up in the description of that YouTube video. Now, I want to talk about some variations, right? Because bear traps come in lots of shapes and sizes, right? I got 3 more variations of ways to time entries below, and I got 1 more variation if we do start running higher. Let's move this now over to the Nasdaq. The Nasdaq's getting lonely over here. Let's grab the Nasdaq here now, which of course is very similar to the S&P. Now, before we talk Nasdaq, if you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing, and sharing this link with other trading buddies. That small action takes no time for you, but makes a big impact on my channel, because YouTube rewards me every time you like, share, and subscribe. You know, I know we're all busy people these days. I appreciate you spending a few minutes every evening with me here on these videos. So thank you so much for your support. Now, let's talk Nasdaq. As you can see here, we are bullish overall on the 60. You did not come here tonight. I'm going to tell you that. You know this already. Let's drill down to some tick charts though, because you know the money is made on the tick charts, right? Timing the best entries, a 4,000 tick chart you'll see linked up in the upper left-hand corner, and the same 21 EMA. What a wild session, right? Big move up, big move down. When I see wild stuff like this, that means that neither side of the market can basically hold this thing. When I see big moves back and forth, it usually means there's a range coming here. So same thing as the S&P. I love the idea of that bear trap down below. I mentioned earlier, let's talk about some variations of this, because you know we talk about kind of the perfect setups on the S&P, but we all know, right? Perfect setups don't happen as often as we all might want. For example, I love the idea of a run down, trap the bears in 2 tries, and squeeze back up again. If I do it that way, I can risk small to earn nice and large, right? That's a great risk reward ratio. But you know what? Sometimes we bounce hard off of that low and we only get the 2 tries up here, 1 and 2. Now see, it's the same entry pattern, but now think about this. If stops are right here, my risk is all the way here. My reward is barely like that, right? That's not gonna be a good entry to take. If we bounce hard off of that low, I want you to remember to buy bear traps. Higher high in price and below that low. Whenever we bounce hard off the low, it's always better to buy a bear trap. This small difference in the entry now puts my risk here, my reward here. It's a much safer way, much more consistent way to take that trade, right? Makes sense? So keep that in mind tomorrow if we bounce hard off that low. And keep in mind too, sometimes will bounce really hard off that low and boing right back up. If it really V bottoms off that low, watch for this pattern. This is one of my favorite entry patterns. When I see this thing V bottom off that low and begin to grind going higher, I get a lot of emails every week from you guys who love these patterns. Once you see this pattern, you will probably love it too. The key here is draw a trend line off the highs, bring that trend line down around those lows. Now, look left, find one of these prior swings that lines up around the low of that channel. And what you want is, you want the first test off the low of that channel. This is called a V bottom, right? A V bottom, or a pop and grind channel, that we call it in our trade room. The most important thing about these is don't chase after it as it goes higher. I know it's not easy, because that little voice in my head, right, when this thing starts grinding higher, that voice in my head always says, come on, man, you're missing it. Because again, it wants to rotate. It wants to rotate other side of that trading range. So promise me, if it pops and grinds like that, don't be chasing after it, because when you're getting stopped out down here, that's professionals are be bear trapping and running this thing back higher. Now, I love bear traps, right? This could be a bear trap, like I'm showing you here. Oftentimes what happens is we get below the 21 EMA. That's where failure patterns live. Failures turn into pullback combinations. If you've taken my free video classes, you know this stuff already, right? So trap, failure, pullback, maybe a strength trade there. And again, leave the runner, because we know Fridays love to run. We'll be lucky to get a pattern like that tomorrow. That's a great variation to keep on your radar tomorrow morning. And then one last bear trap variation. We see this all the time in our trade room, where we'll run down, we'll get that nice, juicy 1, 2, squeeze those stops, run back up again. We'll get our 1-to-1 target. It's a winning trade, but you know, ranges, they love to break out pullback. And sometimes what happens is, sometimes we'll take some profit targets off at the underbell of that range, and they'll run this thing right back down again. Okay, these double bottoms are not, they're not a reversal. Look back over here today, right? That strong run down, right? It retests the low, right? That's the scenario I'm talking about. If we do get, and again, oftentimes we do get that 2-try failure, it's a profitable trade, a winning trade going higher, but the bears come in. Now think about it this way. If the bears sell off that breakout pullback, where would their profit targets be? Probably back at that low. So the way I look at this is that sellers up here, yeah, they become buyers down here. Now, ask yourself this: is this a good place to be selling? Please say no. Please, the answer is no, right? If you want to sell high, right? But I'll tell you right now, when I was a rookie, I knew better, but I didn't do better. I mean, how many times as a rookie trader did I look back at my trades that day and go, what the heck was I thinking? Why was I chasing it going lower? We've all been there. It's like our hands just can't help themselves. They hit the button no matter what. So we know that rookies struggle with chasing after these moves. This is our chance here to basically trap those bears in. Same thing. These double bottom retests might become your favorite trade, because anybody who sells up here, they become buyers down here, and then in come the rookies, right, with their small stops. They can't defend themselves. Here they go. Bears once, bears twice, and squeeze, running right back up, right? Love these double top or double bottom, in this case, reversals off that low. And again, remember that same add-on, right? If you want to make more money, don't trade more often. Get better at leaving runners, get better at adding to your position. And one easy way to add to your trade on this example is to remember that shallow pullback. That's the giveaway. The shallow pullback, separation equals strength. I know I repeat myself a lot in these videos, but repetition is what makes the money, right? Trading is repetition, over and over and over again. Once you learn what works, keep hitting that button until that button breaks on your keyboard. And I've been hitting that button for over 10 years each morning in our trade room. So same thing, right? That failure into that trap combination. And remember, in this case, where does the market want to go? It wants to rotate all the way back up. So you better be leaving that run. Remember, Friday afternoons, go back, look for yourself. About half of all Fridays, they close the day right at the high of day or the low of day. So that'd be a nice add-on there on the way back higher, that double bottom retest. Okay, so now I've covered 3 more variations, right, of that bear trap we talked about earlier on the S&P. Now let's talk about going higher here. First of all, very difficult to pick a top in a situation like this, because if this winds up rolling high, it's a lot of momentum going higher. I wish there was an easy way to pick that top right now, but it's so wild. The range is so large. It's very difficult to find a reliable way to pick the top on this. I mentioned earlier, I would love to get that pop up and that two-legged pullback, right, back off that trading range, basically a breakout pullback off that trading range. I know you guys have been watching these videos the last couple days here. How consistent are breakout pullbacks? Let me know in the comment section below. Are you seeing, are you loving breakout pullbacks now? I swear, I wish every day was a range day because they're so consistent. I got a lot of emails from you guys the last couple days. If you're seeing these breakout pullbacks more because of these videos now, let me know and I'll do more videos like that in the future. So breakout pullbacks, very, very common. We talked about one earlier on in the week this week. Now, that is kind of the ideal entry that we get is that breakout pullback, that two-legged pullback I mentioned earlier on the S&P. But sometimes, especially because tomorrow's a Friday and they get PCE tomorrow morning, end of the month, end of the quarter, every once in a while, we'll see a range, we'll see a breakout, and we'll start grinding, right? It'll break out, it'll give you that shallow pullback. We start looking for the bear trap, right? We look for that bear trap, but the bear trap never comes. Right? It never comes. It just keeps on grinding up, right? Grinding. Now, again, these can be really frustrating because you're like, come on, man, pull back. And I don't want to chase after it because eventually these buyers will run out of bullets. Now, here's the trick on this one. We mentioned earlier, if it V bottoms off that low, it's the same technique, right? So all you do is you go out, you don't chase after it, you draw a trend line off the highs. Now, here's the trick. Anchor that trend line now off these big lows, right? Off these big lows. Now, ideally, it'll come all the way back to that breakout pullback zone, ideally, right? But we might not get that. All we might get is a pullback off the low of that channel. Could be a bear trap, like I'm showing you here. Oftentimes, we get below the moving average. The bears start chipping away at it, right? They get squeezed, running higher, failure into pullback, combination, and running. Now, one cool thing about these pop and grinds, right, where it pops and grinds like this, is the pop leg is the measuring leg, okay? The pop leg is the measuring leg, that strong breakout leg. Write this down. Anytime we see a range breakout, the breakout leg is the measuring leg. It's pretty much always like that. Very, very consistent. In fact, I would argue one of the most consistent things in technical analysis is a range breakout leg is a measuring leg. Where this helps you make more money is by knowing the size of that breakout leg. If I can get the entry, a bear trap, a failure, a pullback entry, now I know where to leave the final target. If you want to make more money, get better at leaving your runners and understanding where to leave that runner. It's more than half the battle. Knowing, right? Knowing is more than half the battle, right? Then it's a matter of reminding yourself because we oftentimes need to be reminded more than we need to learn more things, right? So the breakout leg is the measuring leg. Pop and grind up. That pop and grind breakout, again, always starts grinding higher, separates off that moving average, draw that trend line off the highs, bring it down off that low, and then don't miss that first test, right? First test is always the best test. And of course, right, we may wind up going up. We got PCE tomorrow morning. Don't be surprised. We run up, just rip back down again. Same thing back down here. All right. So it may get pretty wild tomorrow around that PCE number. But remember, we're going to find that range tomorrow morning, start using these rotations to give us levels of support and resistance. It'll basically be either a breakout pullback off that high or one of those variations there of that bear trap I mentioned earlier on. And again, I know I've covered a lot here in this video. If you're new here right now, again, definitely take that free video course. People love the free video course. A lot of folks start making money on their own with that video course, the free stuff on the website. All right, guys, that's the game plan for tomorrow. Now, don't forget tomorrow morning, every morning, 8 o'clock Eastern time, come trade this stuff with us. The easiest way to start making money in these markets is to learn and trade along every morning in our trade room. Again, I'm going to put all the important links in the description of the YouTube video. Hit the links up, learn more, earn more. Hope you learned a bunch tonight. Hope you make a killing tomorrow on PCE Friday. And hopefully I'll see you sometime soon trading with us in the morning trade room, 8 o'clock Eastern time with all the advanced members. In the meantime, guys, be well, be nice to each other out there, and be here next time, will ya? Adios, amigos. Bye for now.